traders, and welcome to a fresh week in markets. Now, obviously, the market is going to be focused on one thing and one thing only to start this week, and that is the war between Israel and Iran that's happening in the Middle East at the moment. Now, look, this war did start last Friday morning in Asian time zone. So the market has actually already had one full trading day to react to this news. And look, probably the best way to describe the market's reaction so far is that it has been orderly. If we have a look at US equity close on Friday, NASDAQ and S&P, they did close lower, but they only closed lower by a little over 1%. These are not big moves considering what is going on. If we look at gold, for example, yes, it has been trading higher. We closed around about that 34.30 area. We're reopening here in Asia just a little bit higher and testing around that 34.50 area. But we certainly have not seen any sort of extreme moves in gold. Like we haven't gone up and retested or taken out those 3,500 record highs yet. So again, it's been more of an orderly move so far in gold. Look, where we've probably seen the biggest move so far is obviously crude oil, which went up around about 10%, up around that $76 mark. But again, we haven't seen any extreme moves in crude. Nothing up towards, nowhere near up towards, the $100 level. I would imagine though that look, crude is probably the most important market to watch because if it did go up towards those sort of levels, I would imagine that you would see equities, etc., a lot lower. So look, what could escalate these market moves at the moment from orderly to disorderly? Look, I'd imagine if the US got drawn into the conflict. So far that has not happened, and the US has actually said that have not been part of Israel's strikes or planning, etc. Now, the other thing that they have also said, and Trump has said this quite forcefully though, is if Iran did attack any say US bases or positions across the Middle East, that certainly would be something that would draw them in, and they would rain terror like never seen before. So that is something obviously that hopefully does not happen, but would escalate matters. But on another note, Trump has also said quite a few times at the moment that he still favours diplomacy, still thinks he can make a deal. So that's something to watch out for as well if we start to move towards that sort of scenario, and obviously then that would de-escalate matters. But Iran needs Israel to stop firing on it before it even considers any sort of talks. Look, it's a fluid situation at the moment. You do not know when the next headline is going to come. So they're very dangerous markets and something that you really need to be careful trading. Okay, so moving away from the war, this week we do have a lot of central bank meetings globally. First one is tomorrow, it's the Bank of Japan. Bank of Japan is the only central bank that is not cutting rates, that it still needs to raise rates. Previously market was pricing in that Bank of Japan would still raise rates again this year. But in the last few weeks we've seen a very dovish Bank of Japan. They are walking back. Hiking rates anytime soon. They're blaming, what's happening with a lot of tariff uncertainty. So the market looks like now it's pushing out those rate hike expectations for the first quarter of next year. So yes, tomorrow's meeting by the Bank of Japan, don't expect anything. Probably more dovish rhetoric, so I would not be selling dollar yen going into tomorrow's meeting. And Wednesday US time we do have the big central bank meeting, that's the Federal Reserve. Obviously they don't expect to cut rates there, but it is an important meeting in that we do get the dot plot. We only get that once every quarter during the year. And that's where every Fed member basically maps out where they expect interest rates over the course of the next year. So the market gets to have a look at exactly where the Fed plans to go over the course of the next year. Market at the moment is pricing in and want the Fed to be cutting no later than September and another cut in December. So yes, it'll be interesting to see whether or not the Fed's expectations meets the market. The one issue that the Fed has obviously is that they are still waiting to see how the tariffs play out on inflation. Recently we did see some inflation numbers that were a touch better than expected, so that should work favourably for the Fed. But what's happening with this war, with crude oil going up, is inflationary. Certainly that is going to complicate matters. But no doubt, Powell's press conference will be a big focus. If he does, talk with some sort of dovish bias, potentially that's going to support the market, and potentially then we may see, the US dollar sell off on the back of that. But let's see. The more interesting central bank meeting is on the Thursday, and that is the Swiss National Bank. They have deflation. They will be cutting rates by 25 basis points. They currently have the lowest policy rate globally of all the central banks, so they'll be going from 0.25% to 0. There is a camp that thinks that potentially that they could surprise and go 50 basis points and actually take their policy rate negative. It's probably the low probability, but no doubt that that is where their rates are heading if this deflation continues. So potentially, the Swiss franc, which has been exceptionally strong on the back of the Swiss National Bank cutting rates to 0 and potentially negative, we might see a bit of a turnaround there. So not sure if I would be going short dollar Swiss into the Swiss National Bank. A cheeky long there is probably the way forward. Bank of England also meets on Thursday, and no expectations for a rate cut there. But in any case, look, central bank meetings are important, but obviously what's way more important is what we talked about initially, and that's the war in the Middle East between Israel and Iran, and what happens there. So again, dangerous markets at the moment, so be careful, and we'll check back in with you shortly.